So, good morning, PK, and welcome. Thank you so much for agreeing to join me in educating all of us about this portfolio management services. Just to give you a brief background about how this idea started. So, some 8 months ago, I invited my mutual fund advisor to one such session, and that session was very well received. I mean, everyone loved it. We had a lot of audience. Someone prepared the notes from that meeting.
Okay.
So that gave me an idea to invite more experts. And we have so many in our own investment community actually. uh,
Mm-hmm.
we have people who are managing money, such as yourself.
Mm-hmm.
We have people who are teaching finance, authority in finance.
Okay.
We have people who are CEOs, entrepreneurs. We have civil servants in our group.
Mm-hmm.
We have tax experts actually.
Policymakers.
Exactly, policymakers, right? So, but not many of them, not many people know about these hidden gems, right? Even in our alumni community, actually. So I started thinking, how about we try to kind of unearth these hidden gems and bring them out in open, at least to our, alumni investment community, so that people get to know and learn from them, actually. Everyone is going to tremendously value it, and no one else better than yourself to start off this series, hopefully. And the reason is that ours is a finance and investment community, and you are the one who are managing money professionally. And
Mm-hmm.
not only that, you're also watching us. You're a part of our investment group, and you're watching us and observing us doing silly things, random things. And you are the right person to kind of sort of give us constructive criticism, basically, how we can improve, right? um, so that's why we are here, actually. Now, one more thing, I guess a few weeks ago I did a poll when we started discussing about this. So I have prepared a list of questions. We'll go through those questions, and any question, like which you cannot answer for regulatory reasons or other things, feel free to skip it, basically. Are we good, PK?
Yeah, we are good. I think we should begin with a disclaimer, which is very standard thing and very much required. That this is just for the discussion that we have organized for the benefit of our alumni and other family friends. Uh, these are not investment advices. People should do their own research, and people should arrive at their investment decisions themselves. So this is just to trigger thoughts and make people think the way some of the professionals do, and I would limit it to that. So I think we are good to begin with that.
Wonderful. And that's the right thing, I suppose. That's just great. Excuse me. So, PK, how about we start, like, just share a brief about your educational background, and then your professional journey, and then how an IITian kind of went into this world of managing finance and people's money, actually.
Mhm. So, first of all, thanks a lot, Anil, for organizing this session. And I see this, first of all, let me give one comment that, I see this community as a very high IQ community, first of all. Courtesy, there is a pre-filter of IIT JEE, that is crossed by everyone to be a part of this community. So I place it with very high regard, and these are all colleagues from my alma mater. So from educational background, I did my mechanical engineering and passed in 94 from IITBHU. And I did my MBA from IIM Calcutta. I was a gold medalist there. And incidentally, one coincidence that the founder and CEO of Magadh Capital also happens to be my IITBHU 1994 mechanical pass out batchmate. Okay, and both of us also went to IIM Calcutta, but we were two batches apart in IIM Calcutta. So that's our academic background. I come from Nalanda, and he comes from Patna. So when we put up this name, Magadh Capital, I think
Right.
you can very well relate that one that we come from that place, the erstwhile Magadh, and the other is that we relate a lot with the philosophy of Magadh as a capital. How it grew as a power in all sorts, including economic power. uh, ये the great teacher Kautilya, he wrote Arthashastra, what came to know. So I think uh, that's how you will see that this Magadha Capital name came into being. Uh, as far as my journey is concerned, I actually worked in four different industries from scratch to some level, I should say. Beginning with EPC, which is Larsen Toubro, and where I was picked up from the campus by L&T right after engineering from IITBHU, and worked there for 6 years. There are a couple of plants which I had set up at that point of time as a project manager, and those are still in operations after a good 30 years. So
Right.
I take pride in that. After that, I worked with IT industry, SAP, HP, Compaq. Then I moved to education and edtech industry,
Mm.
wherein I was CEO of a company called Adiana. It was an India-US company. And then I had set up a company called Edfora, which became amongst top 100 Holon IQ companies. Incidentally, one of the companies that I had founded also got listed last year, but much after my exit at NSE SME exchange. So that's another part of the history. Uh, and the fourth industry, which I am currently working with, and I intend to continue all my life, is financial services, wherein first of all I had set up a family office. Yeah, for a business family in India, and which had some good successes. And currently, I'm with Magadh Capital as a director here. Uh, so I think that has been the journey. In terms of investments, came to me, right after passing out of from IITBHU. That in 1994, I used to work with L&T in a plant in Odisha, and we used
Mhm.
to go to Rourkela, which was the nearest town, to apply into IPOs. So
Oh,
I
very
think there's a good history of 30 years. Learning has never stopped. When I formally ventured into this industry, I spent a year self-training myself. And so wherein I created a small corpus, which was from family, and acted like a fund manager, rightfully coached by some people, including my current CEO and fund manager. And
good.
incidentally, that yeah, in that experiment, I created a small alpha over Nifty 50 returns in that time period. So,
Very good.
some small successes give you a kick. And
Correct.
I formally ventured into financial services. Although by education, I had done a major in finance in IIM Calcutta. So
Okay.
that's the background.
Wonderful, wonderful, PK. So let me, start off by asking a very simple question. I guess, I'm kind of assuming that no one from our community kind of knows very well about PMS services. So, what is the difference between PMS and mutual fund, or what sort of investors are better suited for PMS versus mutual funds?
Okay. I think very important question. In fact, this is something a lot of people are interested in. There's not enough awareness with respect to PMS as such. So let me just give a little background
Mhm.
in terms of, so SEBI has created three structures, and in a sense some three parallel structures. One of them is mutual fund, which is for masses, and which I'm sure that majority of the people are familiar with, wherein there is very little entry barrier, which is 500 rupees subscription. And since it is created for masses, it is also little simple in terms of how you execute it, how you understand it, etc. Okay. In essence, all the three structures. First is the mutual fund. Second is the PMS, which is portfolio management services. And third is alternate investment fund, AIF. So the other two structure which got created, PMS and AIF, this is actually for informed investors. Okay. See, anybody can be informed, but the filter which has been put in here is by way of minimum investment size. So in PMS, there is a minimum investment size of 50 lakhs to begin with. And in AIF, it is 1 crore. Hmm. If you if you look internally, each of these will have a fund management as a role, which will make the investing decision. There would be a custodian, which would have a custodian who will be the custodian of assets. And there is an arm's length distance between the fund manager and custodian, and there would be a fund accountant. So I think these three things become common. But mutual fund and AIF are pooled vehicles. So when I say pooled vehicles, which means that fund manager buys a set of stocks, these are all pooled in a vehicle, and uh, individual subscribers are subscribed to the units of that vehicle. Okay,
That pool.
that is why you hear the units of mutual fund, and the value of that asset divided by number of units is the NAV of that mutual fund. So that is how it operates. All the transaction that takes place basis the sale and purchase of the unit, and the value of unit in terms of NAV keeps going up and down. Hmm. So here, for taxation purpose, one recognizes sale and purchase of unit for the purpose of computing capital gain tax. So I think that's about the mutual fund, and it's usually offered by various AMCs, asset management companies. In terms of PMS, these are like stocks resident in your personal demat account, managed by fund managers. Uh, Okay, but when fund manager has an authority to manage it, a custodian comes into play. Like for us, Kotak is our custodian. So whenever you invest money with us, it goes to our account, which is under the custody of Kotak. Okay,
I
we
see.
identify that this money belongs to you, and then you will log into an account provided to you, which would actually be Kotak's platform, and you can very well see there that so much money is there in your account. And when any activity like buying and selling happens, you can actually view your portfolio on a daily basis.
I
So,
see.
I had said that there's a minimum corpus of 50 lakhs, and it is for informed investors. So I think the basic difference comes from here, informed investors. So since it has been created for informed investor, the SEBI has also provided little additional flexibility to fund managers or PMS, so that they can also create sophisticated strategies. Those can get executed, because the belief is that informed investors will go on to understand these strategies and take a call and benefit from those strategies. So I think that's what is PMS all about. Here, since the transaction is of stocks in investors demat account, which is managed by fund manager, so all the sale and purchase that happens is of the stock in your demat account. And you have transparency at will, which means that you don't have to wait like mutual fund for end of the month to get a statement that what are the stocks which are there. Because any transaction that happens within the month, let's say a stock which gets bought and also gets sold, you may never know that
Mm.
any such transaction happened in that mutual fund, because you'll get monthly statement. Whereas
Okay.
in PMS, you have absolute transparency, because when the market closes, a couple of hours after that, your account will be updated with respect to your holdings, buying price, selling price, all the transactions, any fees, etc. So I think that is about it. Other thing to understand that, the fund managers who sets up the PMS. There are
Mhm.
some AMCs who have set up the PMSs, but there
Mhm.
are many fund managers who have been seasoned fund manager of the industry. When they decide to set up their own house, they actually go and set up PMS or AIF. Okay, so that is why you'll find people of very high pedigree, many of them who have their own PMSs in there. And in general, if you look at the return of average return of top performing PMS and average
Mhm.
return of top performing mainstream mutual fund, I'm leaving aside the sectoral fund, you will find that top performing PMSs have better performance track than top performing mutual funds. So I would net say that, people who are sophisticated, who have ability to understand strategies, who care for transparency, who care for access to fund manager, who'd like regular communication, yeah, and obviously has a corpus of 50 lakhs plus, then that is the set for whom PMS is more suitable.
Wonderful. And PK, thank you. Great information, actually. I just have a two follow-up questions.
Yeah.
So, for example, with PMS, for every client, you are accessing their account and then making changes. So, let us say if you have 500 clients, you will have to go and log in into 500 accounts and make changes. Is that my correct understanding?
Not really. The platform is like that. There's a technology platform which helps us execute that way. For example, when we buy share, we actually buy in bulk. Okay,
I see.
as an institutional buyer, not that we go and execute for everybody.
Mhm.
And custodian and fund accountant ensures that the respective stocks are
Proportion.
credited to individual's account.
I
Okay.
see.
When there is a buy call, uh, the custodian and fund manager, they will also check that, there is adequate liquidity in each account, and
Mhm.
then it goes to the broker for executing.
Okay.
So I think operations is much simpler. It's
Right.
quite well coordinated, and it's an automatic process for us. It happens all the time, every day, and we don't see that, there is any latency with respect to, if we would like to execute, then it happens pretty fast.
Okay. And
Streamlined operations.
very good. So, and I'm very sure that the individuals, who can see their account, which you are managing, they
Hmm.
won't be able to make trades in that account on their own. Basically, they can just
No.
see what
Yeah.
exactly.
They can view, they can do analytics, they will have lots of reports. Like, if you would like capital gain, yeah, as on today, then you can actually just download that. So I
One,
think I have not come across any of our investors who come back to us for information. Okay.
because they
So
can see it all the time.
yeah, it is available at will.
Right.
So there are a lot of people who are informed investors, who would like to do, who are invested into multiple asset classes, and they would want to do a consolidated analytics, and actually want to see how their positions are on a consolidated basis. I think for them, this becomes very, very handy. And
Wonderful.
one thing which we feel that, uh, see, what gets measured gets acted upon. Okay.
Sure. Always.
So I think if you have transparency into analytics, I think one actually can pinpoint to which are the spots, which are the soft spots in the investment journey, and they can also take action. So I think measurement is very, very important, because if you look at average investor, Majority of them do not calculate how their overall portfolio has been performing in different time frames.
Correct. Right. So wonderful. So PK, tell me, like does your PMS offers like one single portfolio, or you have like a multiple portfolio for different risk appetite?
Okay.
Um,
So we actually have two portfolios. Uh, One is a multi-cap portfolio, which we
mhm,
call value for growth. So
mhm,
it's a multi-cap sector agnostic investment approach with BSE 500 TRI as benchmark. Okay, so
okay.
here we always talk about benchmark. And this portfolio, in this portfolio, we invest at least 35% large cap stocks. Uh, and here, our goal is to buy good companies with sustainable competitive advantage, or good companies with sustainably improving businesses at fair price. So that's what is our goal. It's a multi-cap approach, so to say. And
Mhm,
here we follow fundamental research for stock selection. So I think this is one scheme. Herein, we will have somewhere between 15 to 30 stocks. And
mhm,
basically, here we want to help customers create wealth over 2 to 4 years without taking undue risk. So I think that's the overall structure of value for growth. The other strategy that we have, which is a
mhm,
small and mid cap focused structure, we call it as future stars. So here we try and identify companies that can deliver multi-fold gains in free cash flow, or
mhm.
companies which can get into sector leadership, or companies which can gain disproportionately from any industry tailwind. So that's the objective. And here you will see that at least 75% of the portfolio would
Mhm.
be from a small and mid cap. So I
I see.
think these are the two portfolios that we have been running.
Mhm,
Basis the risk assessment of an individual, we suggest one of the two after talking to people, because of the nature of two portfolio, you will also find volatility different, the risk yeah, quotient different, and yeah, expected returns different. Between the two, and in some cases we actually offer a combination of the two. Like for one of our investors, they have 75% as future stars, which is small and mid cap, and 25% invested into value for growth, which
oh,
is
very good.
multi cap.
Okay. So in both the portfolios, you have like roughly 15 to 30 positions, something like that, basically.
Roughly 15 to 30 at an average. You'll see 20, 22 in that
Okay.
range.
Okay. So PK, what is the portfolio turnover basically? How many positions get sold in a year basically?
Okay,
Um,
so
mm,
Uh, I would say that turnover is roughly 100%, close to 100%, 80 to 100%, 120 in that range.
okay.
So you will find in terms of churn, not whole lot that, we will not have many exits in the year,
Mhm.
but the ratios actually changes quite a bit.
Okay.
That allocations change in some cases where we find that our goal is met, or we do not see enough headroom
Mhm.
upside, then we exit out of those stocks. There are fresh entries which are made,
Mhm.
but overall I would say that in a year roughly there's 100% churn that happens.
Turnover. So
uh,
50 to 100% basically in a year,
yeah.
depending on situation. So, and if you're not, if you cannot answer any of those questions, feel free to skip it, and we'll go on to the next one. I'm just coming up with the questions now. While having this great discussion. So, what is the maximum portfolio size, maximum size of a company on cost basis? Which you have in these portfolios, and minimum size also, if you can share, perhaps.
In terms of percentage.
Yes, at cost basis, basically.
Okay. So, see, this is one other difference between mutual fund and PMS.
Mhm.
In mutual fund, there's a hard cap of 10% for any stock. 10% of the AUM you can allocate in one stock. That's the maximum limit. In
Right.
PMS, you have flexibility.
Mhm.
But from risk management principles, fund managers define their limits,
Mhm.
and the scheme is approved by SEBI. So this is a SEBI approved PMS. For us, at cost basis, we do not allocate to any stock more than 10%.
Okay.
If it grows, we allow it to go up to 15%. After that, we have to trim it. Uh, because what we believe that, investment is about future. Future is uncertain. So,
100%.
yeah, we may, however, more we may have a conviction, but I think we need to have a proper portfolio to do well with respect to creation of wealth.
Very good. Very good. So that is great. And so, like at this 10% allocation, that doesn't happen. Does it happen at one point in time, or you do it like in staggered manner? Actually.
Uh, in fact, yeah, unlike many thought processes, what we follow that our investment philosophy is based on fundamental research and behavioral finance.
Mhm.
Okay, so we work a lot on the behavioral finance side,
Mhm.
and there is a bias that comes in when you buy a stock. You actually, when you have bought, you will fall in love. You will start liking it. You will fall in love. So what happens that those biases creep in. For rational decision making, we have to continuously work upon ourselves to separate these emotions from investment decisions, so that your decision making can keep on becoming rational. So what happens that
Mhm.
from our perspective, there are different thought processes, that if we buy, let's say, 2%, then we have already fallen in love. And then if we will have to buy another 2%, then the rationality the rational approach that we had taken in the first 2% is not the same in the next 2% and the next 2%, etc. So what we believe in that work as much as you would like to create a conviction to buy a stock, and if it deserves, let's say, X%, then go
Then
and
go.
buy at one go. So that is how we execute.
Very good. And I'm a guilty of that bias myself. Once I find a stock, I start figuring out ways that how it can still improve basically. And
Mhm.
that's a very normal mistake which we all tend to do actually. PK, wonderful. I mean, I'm just loving this conversation. Uh, Now, let me just ask you this thing: what is the tenure of these portfolios, and
Mhm.
what is their track record? I mean, in a short term, it doesn't matter, but just for audience sake, I guess, for how long these portfolios have been running, and what is the CAGR? If it doesn't matter, obviously, for a short term.
Mhm. See, we started in August 21
Mhm.
in terms of PMS. And since August 21, I would say we had a glitch of when we were trying to stabilize our operations for a couple of months. After that, we have been very steady with respect to performance.
Mhm.
So as we stand today, when I say today means end of December, because
Mhm.
every month end we will have our performance reported to SEBI.
Mhm.
Uh,
Okay.
so we would be on all the three parameters: 1 year performance, 2 years performance, 3 year performance. 1 year performance, we would be in top 3% of all the PMSs in the country. 2 years performance, we will be in top 2% of all the PMS in the country. And
Wonderful.
top 3 years, we will be in top 5% of all the PMSs in the country, which is like 850 plus schemes. In terms of alpha created, we have a benchmark assigned which is BSC 500 TRI, and we would have somewhere around 18 to 33% alpha created for our small and mid cap per annum, CAGR basis, and
Wow.
somewhere around 8 to 13% alpha created for multi cap over the benchmark per annum over I'm talking 1 year, 2 year, 3 years. So I would say 3.5 years existence, and all 1, 2, 3 years we are in top bracket. So I think we feel quite happy about uh,
That's wonderful,
how.
and that's amazing track record, PK. Um, that's great. Now, what is said, it's kind of said, and we all, uh, perhaps it's more of a stereotype that fees are not very transparent, in the financial world, I guess, right?
Mhm.
So how does the fees gets charged with this portfolio management services,
Mhm.
and are they same with all PMS, or like everyone differs, in these fees? Are there any performance based fees also?
Mhm. In fact, when the scheme gets approved by SEBI, which includes the fee structure as well,
Okay.
uh, fund manager is free to propose as a part of the scheme fee structure.
Mhm.
And there are some caps defined with respect to expenses. So you may find some difference in the structure of the fee and the fee level of different PMSs.
Okay.
But broadly, I think we are quite competitive with respect to other PMSs with similar track of performance, I would say.
Okay.
And for us here, any investor can choose from two fee structure options.
Mhm.
One is a fixed fee structure, which is like fixed percentage of AUM. So first of all, let me tell about standard fee structure. And because we also have one category, which is friends, family, and alumni category. Okay,
Okay.
for whom we have kept a different fee structure. Uh,
Okay.
we owe it to this community because when we started off, this was the community which actually gave us the seed capital to begin with, create our track without having a prior track record, and they basically trusted us. Subsequently, people came seeing our track record.
Mhm.
So a fixed standard fee structure is like, fixed is 2.5% of the AUM, which is
Okay.
charged on monthly basis
Okay.
in arrear at the end of the month. Okay. Uh, uh, the other fee structure is fixed plus performance,
Mhm.
whereas part is fixed, which is like 50% of that is 1.25% fixed fee,
Mhm.
and in the rest of it is performance based, which is 12% of return created above a hurdle rate of 10%. So
Okay.
for any return above 10%, 12% of that goes as the fee. So roughly somewhere around 17-18% becomes the breakaway point,
Right.
beyond which performance
Fixed
fee
fees get
becomes the higher. And but interestingly, I should tell you that we have seen more people opt for fixed plus performance based fee than fixed fee with us.
Oh,
So
really?
yeah, this could be different. Again, the informed investor,
Uh,
so they make a choice, they calculate, they create scenarios, and then they settle for one. So there are more options.
right. And PK, now you mentioned that there is some discount. What is the discount for the alumni and the friends and the family
So
community?
yeah. So what we have done is for the fixed fee part, we
Mhm.
have kept a 40% fee, reduced fee for this community. And
Awesome.
yeah, that's what we thought that we owe to this community who trusted us in the initial years or initial time frame.
So does that discount? So that discount is applies to all the investment community, like what we have, for example, I guess, right?
Yes, yes, it does.
Don't be surprised if you start getting like a more pings, and people start pinging you a lot more, I guess. That is great, PK. Just awesome. Now you already answered like the minimum investment, that is 50 lakh. Is there like any lock-in period also, which has to be there, that people
See,
can?
uh, actually, we don't believe in any lock-in. Okay,
Oh,
first of
okay.
all. Okay,
Mhm.
so But we are a great believer of right fit. Okay. So any PMS is one should do with a long-term
Mindset.
perspective. Okay. Let's say minimum 2 years kind.
Mhm.
So just to discourage people, so
Mhm.
that if you have a plan to invest for 6 months, you do not opt for this option. We kept lock-in for a year, and with a small 0.5% fee for that.
Mhm.
But I think fundamentally we don't believe in this, and we are happy waiving for individuals with whom we get a comfort that he understands that this is designed for long term
Long term.
investment and has come with that purpose, because the purpose of lock-in is only that for us.
Very good. Wonderful. So, few more questions, I guess, on the same theme. How does your research team kind of select or screen stocks, BK? Do
Okay,
they go like
so
a bottom-up approach or like a top-down approach, or
mm,
um, how do they, identify picks for the portfolio? What is the process, I guess, of picking and deciding a stock?
okay.
Um,
So I think research part takes good 75 to 80% of our time.
Correct.
First of all, so this is the core activity that we do, and we just keep on doing. Uh, when we talk about sourcing of stock or sourcing of any idea, I think there are three, four things that work. One is that, like anybody else, we also use screeners to create the ocean first, wherein we would focus primarily on growth parameters, return parameters, margin parameters, valuation parameters, management quality. I think some of these aspects to create a short list. So we have it varies between 150 to 250 stocks, that range at different point of time in our basket, so to say. And after that, basically, if we have identified a particular stock and yeah, uh, see that we do need to do more work on it. One of the things that we try and practice, that if we have to reject something, reject it fast.
Sure.
Okay. Because there is only X number of stocks that you can meaningfully research in a given period of time. Do a deep research. So I believe is that, do a deep research. So if we don't like an idea, then, kind of chuck it out fast, or park it, or keep it in the watch list, etc. But the ones who progress from there, here, what we do that, we understand business model in detail. We actually do a projection of P&L, balance sheet, fund flow over the next set of periods, let's say, 3 years, 5 years, 10 years, depending on what is the kind of visibility of the business that we have. And we create scenarios with probability. When I say scenario with probability, that since you have a lot of practicing managers, they would understand this, that business of future is not a right cut. It is full of uncertainties. There would be full of scenarios wherein somebody may decide to set up a new capacity when there is 80% utilization of the plant, or he could do that when there is a 60% utilization of the plant, because he's seeing brighter demand there. So there could be multiple scenarios. So we build these scenarios with probabilities assigned,
Mhm.
and then we apply DCF to arrive at the fair value of the stock. And if we see that there's a good enough gap between the current price and the fair value, then we pick that up as a candidate for our portfolio, and it goes to the next step. So next step is, we have got something called a facts box. It's a proprietary methodology that we have followed, which helps us with the diversification process as such. So when we say facts box, it's actually 5 buckets of stocks. and
Mhm.
each of the stock has to fit into at least one of these and comply with the nuances of those. So F stands for fast growers, where we very clearly see that the earning should double in 3 to 4 years. Okay, so and you'll usually find those in small and mid cap, those buckets, more of these yeah, type. Then facts, F is fast growers. Next is A is asset play, where we see there is an mispricing of any asset in the company.
Sure.
And we also believe that there would be triggers in future for recognition of those assets, because there would be a lot of time that there would be assets lying and that remaining unrecognized for maybe a decade or so. It doesn't help. Okay. Then there is cyclicals. There are many companies which are cyclical in nature. So you have to catch the cycle. Yeah, commodities, oil and gas, steel, metal, etc. So you have to catch the cycle to invest into that. Then there are turnaround candidates wherein we believe that there is a temporary yeah, problem or issue with the earnings of the company, and
Correct.
which could get fixed basis a set of triggers in future. And those triggers could be change of management, reorganization, or any event happening with those, some policy changes, any change in business model. So those would be turnaround candidates, but here we should very clearly be able to see that the earnings profile is expected to change in future. Okay. And the fifth category, which is facts, FACT, T is the turnaround, S is stalwarts category, where we
Okay.
see that earnings grows by 12 to 15% per annum. So I think we pass yeah, through this facts box, and then once we have configured the portfolio with proper diversification, uh, what we do that we look at the parameters of the portfolio as if portfolio is one unit, and we would do a weighted average projection of revenue over next year, next to next year, earning next matlab for next 2 3 years, then how EPS will move, yeah, how beta will move over next set of
You're
years,
right. Mhm.
set of parameters. Because our belief is that money gets made not because few of your stocks do very well. If few of stocks do very well and the location is low, you will not make much money.
Correct.
But if the value of the portfolio changes, then you actually make money. Okay, so we balance the portfolio, we track it, and we see all the parameters. If we see that some parameters of the portfolio is going off beyond our comfort, then we
Mhm.
will look at who could be potential high contributor of those parameters into the portfolio, which also calls for an adjustment into the portfolio or the changes into the portfolio. So I think this is the process that we follow, and this is updated on a very regular basis. That all earning calls, any heating up of competitive intensity, any sectoral change, any policy change. So I think those are the triggers to revisit the our assumptions of business projection, and yeah, taking a call on the portfolio as such. So I think this is a continuous basis. One other thing that we do is we do an exercise called pre-mortem. Okay, so pre-mortem is it's used in decision making for many people, but not many in the investment industry. So here, what we do is that once we have made a call on a particular stock, and we have made a projection that these are the scenarios, the probability of businesses to move in different scenarios are like this. There is a fair value which is sufficiently higher than the current fair value, and the fair value would be in a range. And then what we do, we actually transport ourselves into, let's say, 2027, and with a conviction that our call has gone wrong. Okay, and then we will try and dissect that what are the elements for which this call would have gone wrong. So
Mhm.
do a pre-mortem. It's very revealing if you do this.
Mhm.
And I would also encourage some of the decision makers to they can explore use of pre-mortem in some key decision making in their businesses. It's very powerful. Uh, the other thing that we try and do is also try and discover that what is in the price today,
Mhm.
because there would be no one answer that what is in the price today. The-
Mhm.
because there are multiple scenarios, so we try and juggle with those scenarios and try and arrive at that what is in the price today. So I think these exercises of arriving at the fair value basis the projection, doing a pre-mortem, doing what is in the price analysis, I think that helps us create a robust portfolio.
Very good.
And there would be a proper diversification, because when we say diversification, we would like low correlation to the portfolio of the stocks. So not that all the stocks should move together, not that all the stocks should do capex together, uh,
Right.
not that all the stocks should get equally impacted with respect to change in interest rates. So I think there should be different types of earning cycles which should be within the portfolio. So I think these are the work that we do, which to that helps us keep a track of the portfolio.
No, wonderful. And that kind of leads, like, that helps you in doing the proper position sizing, or maybe selling a position, or, taking decisions, I guess.
Yes, yes.
So just, PK, first of all, we already exceeded the time. I think it's okay if we continue, right? I'm enjoying it. If we can continue for 20, 30 minutes, I guess. I
Yeah,
still
yeah,
have.
absolutely okay. I'm good with me.
Perfect. So, what percentage, like macros or technicals, come into your picture of decision making, basically?
Okay,
How much percentage, the weightage of macros and technicals, looking at the
okay.
chart and,
So first of all, let me talk about macros. Macro, we are a great watcher of how the macros are moving.
Mhm.
Okay. But it has a limited role when we take an investment decision. We actually use macro primarily for one thing, that we should not get trapped into a bear market scenario. Okay, so if there is an impending market collapse, or we see that there's a 25% downside with very high probability, then we would not shy away from taking a serious cash calls. So
Sure.
I think macro contributes primarily to this part of our analysis.
Mhm.
Rest of it is like with respect to stock. Technicals, not we are not against anybody, but we don't have much belief in technicals, because fundamentally, this
Right.
investment is for long-term basis, and
Right.
technicals usually have a life cycle of shorter time frame.
Very
So
true.
see, if we have to go from current price to, let's say, fair price, it doesn't matter that what is the path it takes. It may go in a straight line, it may go down and up, it may go up and down. So I think that is the outlook that we take. So any development, anything, any, I would say, market noises, our recourse is to go back to our research assumptions, look at those assumptions, and see whether fair market upside is still valid or not.
Very true, PK. And I think that is what I often say, that if we have find a discrepancy in the price, actual value versus the market price, then we need to give it time to fix that value discrepancy, and to expect that first of all, we have to be right that there is
Hmm.
a discrepancy. And
Hmm.
second thing is that if we are expecting that discrepancy can go away in a very short time, that is, we are setting ourselves up for failure. So we
Hmm.
have to allow the time to fix that arbitrage, basically.
Yeah, yes.
So very good. That's very interesting. Now, PK, as I said in the beginning, that you are the right person, because you have been watching our investment group also, and
Hmm.
the discussions, what we do and all that type of thing. So I don't know how much you have taken a look at the Shubha portfolio, but if you
Hmm.
have any thoughts about the portfolio, or any ideas, the bad ideas we have, or any type of ideas which we should take a look into. I think it'll be great if you can give your opinion, if you have taken a look at that portfolio, basically.
In fact, yeah, I did take a look at SOHA portfolio, and incidentally, um, at this point of time, our portfolio and SOHA portfolio does not have even a single stock in common. Okay, so but I see that as the beauty of this market. Okay,
Bilkul.
so
Bilkul.
two completely disjoint portfolio, both of them doing well, and both of them being pursued with specific philosophy and thought line. So I see that as a beauty. The other observation which I had, which actually two observation. One is that there are two benchmarks which was mentioned there. Compared against the performance of the portfolio.
Mhm.
One was Nifty 50, other was I think Bank Bees or something. Uh,
Correct.
so,
Correct.
and to me, it looked that possibly the configuration of the portfolio corresponds to some other indices may represent it better in terms of benchmark.
Very
Uh,
good.
yeah, some other indices, 500 or Nifty 500 or BC 500 or mid cap index, small cap index, some of those. So people can think about that, what represents it more closely. So
Mhm.
that's another thought. The one more thought which I had, that I see capital market as a theme very heavily represented. Capital market is a structural long-term theme, and it's a good theme. At one point of time, we also had some stock of this particular theme for some time. Uh,
Mhm.
but one other thing that people should know about, see, there are no right or wrong for many things. So for investment approaches, I think risk probably comes from not knowing what you're doing. Okay. So this was said by Warren Buffett. So I would say that people should just know there's a very high degree of alignment of this particular theme and stock market in general doing. So if a stock market does well, it attracts more investor. There would be
Correct.
AUM growth, and most of the players' AUM will also naturally grow along
Hmm.
with new investors coming on board. So I think there is a tremendous tailwind. But if the reverse happens, then
Then
both of them, there would be a double whammy for that. So I think this is something which, yeah, I would say participants should be aware of. So
hmm.
I think these were some two, three observations which I had. The other question, yeah, you were saying something.
No, no, go ahead. Please go ahead.
Uh, and the other question that you had on some ideas in
Hmm.
terms of what we are looking at as you know promising source of our pursuit with respect to finding building portfolios. So I would say that there are some which are very, very prominent at this point of time. One thing which has happened across the globe in many countries is that per capita GDP, when it crosses somewhere around 2000 $2,500, the escape velocity phenomenon happens in many economies, and there is a sustained growth for several years of the
Hmm.
economy, and there's a creation of new demand of a high order in many discretionary items, yeah, for a sustained period. So I think this is one theme that people should really explore. There have been some real wealth creators. So
Hmm.
some I would give you some example that you know initially for a poor family, what happens that, let's say if 50-60% of the earnings goes into food item, and when that keeps going down to, let's say, 30%, and those 20-30% which gets liberated, that gets spent into consumption of next set of things, and next set of things, let's say apparel. So
Right.
people could think about what are those items which they are going to consume over next set of periods in, let's say, tier 2, 3, 4, 5, 6, those kind of cities. And again, since many of them will not have high barrier, the real work would be to differentiate between winning business models and other common business models into that. I think that this could be a source of wealth creation for many years to come, since India has entered into that arena where our per capita GDP is around $2,500 US dollars. So that's one. The other thing you could also think about some large lenders. Okay. So
Mhm.
these large lenders, yeah, at this point of time, one, that they have pretty attractive valuation. So
Mhm.
not much downside, so to say, but they have clean balance sheet. They have some of the ratios like capital adequacy ratio, CRAR, as something which they are seeing yeah, of this level after several years. So I would say that they're good to go ahead with their lending process for next 5, 6 years without much capital infusion. Okay. So I would say that when private capex cycle turns, because these things also are cyclical. So when these things will be turning, these large lenders would be rightly poised to yeah, benefit from those stuff. So I think there are some others. For example, you can also see that government is creating various hooks around which the mobility takes place. Huge mobility takes place. For example, series of airports are getting created all over the country, and there are religious corridors which are getting created. So all these actually creates serious mobility of people, which means that irrespective of how a lot of things are doing, demand for hotels around these places. Okay, so that could be something which is again a structural development that is happening, because many of them, and also I have seen that some large scale events that is in focus, that is of talk of the town every now and then. Every couple of months you'll find some very large
Yes.
event happening. So hooks of airports, religious travel, yeah, events, I think these also create demand for a set of stuff. So I think these would be some. And not to forget the manufacturing focus, because see, India's services industry developed early. I would say earlier than for a longish period of time. So when this $2,500 GDP phenomenon happens, what also happens that there is a drifting away from agri-based development to others, which is like services or manufacturing. Services for us is like to some extent already developed, and so there has to be a disproportionate focus on manufacturing to sustain yeah, the next level of growth.
No,
And
basically.
that is why you would also notice that every other week there is some government minister talking about either PLI or some expansion or import substitution. And I would say disproportionate focus on manufacturing. So I think these are some of the themes which we feel that people should focus on for wealth creation or portfolio making purpose.
Very good. And these teams, they have like a long tail for next 5 to 10 years very easily.
Yes.
As our per capita income grows, basically.
Mhm.
All right. So, PK, now you have been a part of that, the investment community also. So, any thoughts about, how to strengthen that community, or things which we are not doing properly, or, things which we should, continue do or do it more, basically,
Mhm.
in,
So,
in the investment group.
I would say, see, community is a collection of people with a purpose. So I would look at it like this, that as long as the community's purpose is getting served, individuals' purpose should also get served. So people are learning, people are benefiting, but the onus is on individual to very clearly do their own risk profiling and relate with what is the subject of the talk, not merely copy or follow what is being talked, but ensure that there's a relevance between their own risk appetite, risk profile, vis-a-vis what is the subject getting talked and what is the action being taken by a set of people. I would say ki, this on one side. The other side is that I think you've done a great job trying to help people graduate to next level in terms of behavioral finance. So I see that change in approach and attitude is very clearly reflected, and it's a community of brilliant people. So they would catch anything very early, and so the other thing is with respect to learning and awareness. I see that there is a two-prong approach which could be taken. One is since there are many industry experts, invite uh, industry senior folks, practitioners who can demystify industry understanding to people across the community. Uh,
Mhm.
Similarly, invite one or two policymakers. For example, we have the highest authority in planning of power in the country, who is an alumni of ours. So maybe invite people like him to actually talk that how country looks at power as a subject. Okay.
Mhm.
So it could actually, trigger the thought process in terms of a longer term perspective, and then you can actually do your own homework. Similarly, maybe invite some other practitioners on individual specific topics. Let's say
Mhm.
research of a company, or portfolio making, or let's say risk management as a subject. So when I know a couple of subjects which could actually enrich. So I said one on the industry side and the other on the investment topics. I think these are the two awareness areas which can benefit people a lot.
PK, wonderful. This discussion we can keep on going on. I guess it looks like this is so fascinating. Um, Now, let me just come to the towards the last two questions. I guess what I have. Um, um, One is like if one wants to invest in PMS, for example,
Mm.
what is the research process they should do to figure it out? What is the right PMS?
Mm. See, I would just give an analogy. Again, going back to the original theme, the mutual fund and PMS. Mutual fund is an asset management, is from an asset management house. Also, some PMSs are also offered by them,
Mhm.
but by and large, PMSs and fund managers go hand in hand. So this is like, so to say, if PMS is an offering from an hospital where there are multiple departments which represents multiple schemes, PMS is like a super specialist doctor in his own clinic. Okay,
Mhm.
so I think that's the parlance which is there. So I think one is that you need to be very certain about that super specialist doctor. So here you need to be very certain about the fund manager. Okay, so in asset management company, the fund, they will have multiple fund managers. They may change roles, move to different funds. There will be hierarchies, etc. But in many of this, at least small and mid-sized PMSs, you will find the PMS and the fund manager kind of go hand in hand. Okay, so one should research little more about the fund manager himself. How what is his educational background, how has been his training, what has been his experience, his track record. The other thing to look at is that the philosophy that he professes, does he actually follow that? I'll give you some simple example that somebody talks about governance being the first filter. Okay, look at the portfolio that he has. You can very clearly identify the set of companies with high governance, set of companies which are known for not so strong governance. Okay, somebody talks about being a value investor and then has a set of stocks which
Mhm.
are just the opposite. So I would say that little bit of effort is required beyond the performance track to see that what somebody talks, he actually lives that life. Okay, so once you have settled into that, and that fund manager or PMS is amongst the top quadrant, I should say, you should not look for the absolute best, because absolute
Right,
best keeps on changing.
right.
But as long as somebody is in the top quadrant, you get comfortable with that, and you have access to that. Okay, so I
Mhm.
think then he's designed to be he can be an appropriate your personal super specialist doctor for a long period of time. I would say that's how one should look at a PMS.
Now, you said that one can take a look at the portfolio. Is that possible to see the portfolio while doing the research about PMS, PK?
Yeah, at least see top stocks will be there in the deck itself.
Oh,
Okay,
okay,
yeah,
okay.
and if you have zeroed down on a set of people, then you can actually ask for it.
Ask them to.
Yeah,
Oh,
ask for it. You can have a conversation around that, because see there, this is also HNI investment, so there would be a more closer conversations. It is not like a passive buying. So we do engage with people. Like there are some family houses which have elaborate discussions on some of these aspects.
okay, okay. Wonderful, PK. So, I think, we have already exceeded 1 hour, PK, and it's
Yeah.
just amazing. I hope, we get to do this thing more. I am sure people are going to, love watching this and learning about it, I guess. In the last, I just have this one question, like, what if you have to make an elevator pitch for people, who are looking to invest in PMS? What would you say about Magadh Capital, perhaps?
So uh, I would just say that here is a boutique PMS, young, but within a span of 3.5 years, has been a consistent performer in all the parameters: 1 year, 2 year, 3 years performance amongst top 5%. Uh, we have a fund manager which very high pedigree. Our fund manager, the founder CEO Vipul Prasad, he's ex executive director Morgan Stanley, and he was amongst the top performing analyst for them globally for several years. So we have that pedigree. We come from the same fraternity as IITBHU, IIM Calcutta. You will find us accessible. So I think to be your long-term partner, these are the things which will matter a whole lot to you. You need comfort, you need access, you need performance, you need consistency, and we are simple people, transparent. We do what we profess. We actually do that, and we are completely aligned. So our own money is in the same portfolio. Uh, all the partners. So their interests are completely aligned into that. So there would not be a decision which will not impact the fund managers differently than any of the investors. So I would say, and most welcome. We are easily searchable. Reach out to us. I can give my WhatsApp or mobile number. Uh, it's 98186568894. So I'll repeat, 98186568894. So I think drop in a WhatsApp message, and then we can have a conversation around.
PK, wonderful. And thank you so much. We planned this discussion for like a 30, 40 minutes, and we have already exceeded 1 hour. But it has been fascinating to listen to you and learn, about how professionals manage money and go about it actually.
So I think I must thank you, Anil, for this initiative, first of all, and through you to all the community members. wishing you a very, very happy journey, creating enormous amount of wealth in a very structured manner, with uh, alongside getting sound sleeps every day.
Thank you so much, PK. And we'll touch base again. Thank you so much.
Yeah, thanks.